Good afternoon. Time to check in on the market. Starting off with the picture in Asia. Asian markets kicking off the month of August on the back foot as US-China tensions continue to stir safe haven demand. And other news, investors are keeping a wary eye on Fed comments pertaining to any need for higher interest rates in order to quell elevated inflation. Today we are expecting commentary from the Fed presidents in St. Louis and Chicago. Locally, that recovery that we were seeing in the Rand managing to come off a little bit earlier on. The Rand currently 16.62. We also had a couple of news coming out from the stock exchange news service, the JSE, as it were, releasing their financial results. And we'll have that interview for you a little bit later on. We're actually going to play it for you tomorrow as we're having that conversation with Layla Fourie, who will be delivering the JSE presentation between 2 and 3 this afternoon. Nonetheless, to talk to us about other market news and also unpack the market sentiment right now, we are joined by Martin Smith, who is a portfolio manager at Anchor Capital. Martin, thank you so much for your time. So right from the onset, you're looking at Asia lower, European markets also not looking particularly great right now. And it's all around that China, US-China tensions. How are you reading, market sentiment right now? And what would you say are some of the headlines that are driving markets?
So, we had quite a nice bounce in the month of July. We saw risk appetite return quite nicely. We saw the market adopting a little bit of a glass half full type of view of the market. So even if companies were just meeting expectations, their share prices were appreciating quite nicely. So things were looking a little bit positive, but like you mentioned, now there's starting to seesaw a little bit more into the negative. And I think that's how I'm looking at the market in general at the moment. This year, it's just been this absolute seesaw of sentiment. Some days it's positive, some days things are looking really bad. But the fact of the matter is that there are quite a few overhangs at the moment. You've got, like you mentioned there, US-China relations, you've got the war in Ukraine and Russia, you've got interest rates and inflation, global recession. So there's a lot of things that are still overarching themes that people are wanting to see what's going to happen. So a lot on the go. And again, I expect that seesaw of positivity and negativity to continue. And I think you just got to look for opportunities to buy good companies when the chance arises.
Speaking of the month of July, how would you then describe it when we look at the JSE and its performance? Were you also seeing that bounce?
Absolutely. So, we also need to remember that you've had the JSE being a lot more resilient than global markets on the back of things like commodity prices doing very well. And obviously, we're very much a commodity-backed economy. So we've held up very well relative to the rest of the world from a JSE perspective. So we did have that bounce. Global markets were up in the region of 7 to 10%, depending on which index you looked at. So we didn't quite get that. We got about 3%. Also, we had some Rand strength come through. But what was quite interesting is one of the big parts of that was from Naspers and Process, which has been quite a big detractor of value in the better part of the last year or so. Obviously, we had that announcement around the selling of Tencent shares and the buying back of their own shares with Massmart and Process. It was hugely beneficial to both share prices. So that was quite a big push. But again, we are also relatively at the mercy of what kind of global sentiment does around the world.
So I mentioned in my intro that, we had quite a bit of news on the stock exchange news service, and one of which was Massmart's trading statement. What do you make of the Massmart story? This is a company that's had 3 years of losses in excess of R1 billion Rand each year. They're also trying to go through that turnaround initiated by their current CEO. What do you make of the story so far?
Yeah, it's been a tough ride for Massmart. The share price is down 45% year to date. It just shows what the market is kind of feeling towards the share. I think the big thing with them is it looks cheap from a certain kind of metric perspective. Depending on what you look at, it might look like a cheap opportunity, but I've been on the sidelines with the share for a long time. I continue to be on the sidelines with the share. I think there's a lot of things that they need to get right. Yes, they are having a bit of a turnaround story, but operational momentum in the business is definitely negative, and we've seen that again with the share with the results that have come through now. Revenue slightly flat, but the headline loss per share even more significant than it was this time last year. So one that isn't looking great at the moment. Hopefully they can recover and have a bit of a turnaround story. I'm very happy to sit on the sidelines for now.
So let us in here. Are you switching up portfolios at Anchor Capital, or are you riding out the current period as it is?
So we're definitely riding it out. I think a lot can be said for an investment manager's philosophy, and you also need to stick true to that and not try to get too clever with timing and with switching into short-term themes. So yes, we are looking for opportunities in fringes. So for example, we bought Citigroup offshore a couple of weeks ago. We thought it gave us a nice opportunity. So just trading on the edges, looking for good companies, but again, not trying to get too clever in a very, very volatile market where things can change in an absolute instant. I think good companies, good earnings profiles, and just try and getting them at reasonable valuations now when volatility gives you a chance.
So local earnings season is about to get into full swing, even pick up. Which companies are you going to be paying attention to, and why?
So I think we also need to differentiate between offshore earnings season and local earnings season. So offshore, obviously, it's all the companies within a couple of weeks. It's quarterly. People do metrics on the kind of aggregate earnings and the like. So it carries quite a lot of impotence there from a earnings perspective, from an overall earnings perspective. In South Africa, it has to be a little bit more company and sector specific, and the results are a lot more spread out. So just want to differentiate that. So I think it just comes down to, again, company specifics, the ones that we are investing in, the ones that we are looking in, trying to kind of draw conclusions about, for example, where commodity cycles are going and the like. So I think it's across the board. We're looking at it, but again, I think it's very, very company specific and very, very sector specific.
All right, so we'll definitely catch up with you in a week or so in terms of whether our earnings season has met your expectations, especially when you look at some of the companies that will be releasing their financials. That is it from me. That was Martin Smith, who's a portfolio manager at Anchor Capital, giving us his perspective on the latest when it comes to the markets. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.